All right. What up, Steve? Good to have you back on the show, man. Long time no see. How you been, buddy?
Has been a while. Thank you so much for having me, Ryan. I've been fantastic. How have you been?
Dude, great, man. Good to have you back, man. You guys been when I talk about dexes, man, I wish every dex I use looked like VY, man. When it comes to user experience, I mean, from day one, like when that thing turned on, the first time I saw it, I was like, damn, this is sexy, man. And you just made it better and better. And then still got my original VY NFT from the pre-sale. And you had staking going. What did that peak at? Like 2,000 or something like that?
It got higher. So the purple that you got, the highest it peaked at was 4,500 Cardano. Yeah. And that was back when Cardano was over $1. The other one as well, our gold, the highest sale we've had for our gold NFT, which there were only 50 of, was 11,500 Cardano.
Dude.
Which is wild. Like when that happened, I was just gobsmacked. I'm like, who just did that? But I'm glad they did. It's a good story.
Yeah, dude, that's sweet, man. Congrats on that, buddy. That's huge, man. You guys nailed those too. You guys were one of the first. That was a 3D animated, right?
Yeah, we were the first to do we were the first to do NFT staking on the Cardano chain.
Yup, dude, congrats, man. So how's everything been going on Cardano? Can you tell us a little bit about like what has actually happened? Like what we thought smart contracts were going to turn on and it was going to be smooth sailing, and tell us a little bit about what's going on over there.
Yeah, look, as I think we're all aware, it wasn't quite as smooth sailing as we were all hoping. But nothing in life is, really. So there's been a few stages, right? Since the launching of the smart contracts, we've had a large amount of smart contracts be launched, right? But then we've had two issues that have kind of emerged. The first issue was that of scalability. And we essentially found that the blockchain wasn't able to keep up with the massive load of transactions that were taking place. This was particularly around 6 to 9 months ago, right? When Sunday Swap first came out and there was a really big incoming transaction. After that, the next sort of delay that we've had has just been understanding how the Plutus code base works, right? So being a very new code, language, being the first time it's ever been implemented and being used, there's a lot of logic, particularly in the extended UTXO model, that we just really need to work with to properly understand how we can flesh it out. So yeah, I would say it was from a scalability issue, which will hopefully be solved with this upcoming Vasil hard fork. And then it's just been the technical issue of learning how to program and how to write and build in this language.
Dude, that's sweet, man. So I was like, when Plutus turns on, or when this next upgrade, like what are you guys waiting on that's really gonna, is it just the layer 2s that are gonna compress transactions? You guys are gonna move on to layer 2s and then that's gonna speed up and...
That's a bit of an interesting one. We're not strictly moving just to layer 2s. We're still building our product on layer 1 Cardano, right? On the Cardano blockchain. With Vasil hard fork, we're going to be dealing with a lot of these scalability issues. Now, just in case anyone on your channel isn't aware, I'll just quickly describe what Vasil hard fork is. It's coming on the 22nd of September, and it allows the blockchain to essentially scale block sizes based on what's required. Right?
No way. So they're going to increase the block size based on demand? Is that per block? Exactly. Or is it like going to go up? That's exactly it. So right, indefinitely?
We get elastic block sizes.
Oh, that's sweet.
And then from there, they've also done a lot of data optimization. So the way that scripts are handled on smart contracts have been optimized, rendering them cheaper. So it's going to become cheaper to run on the Cardano blockchain, and we should have essentially scalability solved. Now, the only issue, and there is a little hiccup to this, right? This is a hard fork. So that means that existing contracts on the blockchain need to be remade and migrated to the new form, right? So if you've got liquidity in MinSwap, for example, which is a Cardano DEX, you'll need to wait until MinSwap have released the Vasil fork contracts, and then you need to migrate your liquidity to the Vasil fork contracts. We've all done migrations before. That's part of crypto, really.
And so how did the migrations work? Like, what if you don't? Like, I still got my original VY tokens. Are those still claimable? Can I still?
Yeah, we're absolutely tradable. We've actually just done a 40% pump in the last week, which has been rather incredible.
Dang, congrats, homie. That's huge, man.
Yeah, it was a good feeling. Particularly since the market's really been struggling at the moment. I don't know why we suddenly had this pump, but it was really nice to basically just be counter the market, right? I think it's because with the market being a little bit like lagging at the moment, a lot of people are trying to look to alternative tokens to try and protect portions of their portfolio. The idea being that if you get into some new projects now, you're going to hopefully be able to have some of them go well, and you're going to be able to protect some of the losses that you have just by holding certain coins outright. That's one of the reasons I'm not a very big fan of Bitcoin, for example, because you can't actually navigate yourself very well through many markets with Bitcoin to help protect your portfolio, because although they did release Taproot, it appears as if nothing has happened since Taproot. So they don't have any DeFi or any smart contracts on Bitcoin chain yet.
No, I don't think they will, man. It's already it's 350,000 TPS a transaction a day is I think their max workload. You don't really have. I mean, have you watched their Block Explorer? It's maxed out. Even a layer 2, I don't think would help it much.
Yeah, and that's why you have the layer 2s like Lightning, right? And it's really interesting. I was at Bitcoin Miami 2022. Were you there, Ryan?
No, I didn't make it to that one. No, I'll make it to this next one though.
You'll make it to the next one? We're going to definitely be there. So I'll certainly meet up with you.
Okay, definitely. Yeah.
But that wasn't what I was saying. So we were at Miami 2022, right? So there, I actually met the team that was building Lightning. I got on really nice guys, you know, really Bitcoin maxis, which is fine. There are a lot of Bitcoin maxis around. And what was so funny is that even though Lightning Network are a layer 2 Bitcoin network, basically made up of Bitcoin maxis, they were still too scared to get a booth at Bitcoin 2022. Right? And I asked them, I was like, why don't you guys have a booth here? You're Lightning. You're like one of the largest layer 2 networks on the chain. And they looked at me like, oh, the audience at this place is a little bit too maxis for layer 2. And I'm like, what are you doing here? I literally don't understand. You just come around and, oh, excuse my language. You might want to cut that. Do you just get around here and pat yourselves on the back about how good Bitcoin is? Like, what's the point if you're not doing anything?
Yep. There's no demand for it, man. Outside of being just a store of value, it only goes up in value if more people want to use it to store their value. But with all the cryptos coming on the scene, I mean, I don't know where it's going to go. I just know I just bought 2 Bitcoin over the last year and a half. So I'm just like,
sitting pretty.
I've never, every other time I've always bet against Bitcoin, not bet against it, but just been like, oh, the tech's outdated. It's not going to evolve. And every time I go into a bull run, I kick myself for not, having a couple in my wallet. So this time I'm like, screw it. I'm going to buy 2 Bitcoin. That's it. I'm going to hold them forever and see where it goes,
I definitely loaded in on some Bitcoin when it dropped below 20K.
Yeah.
I'm not the biggest Bitcoin fan, but same thing as yourself. I've been trading Bitcoin since 2017. So it's something that's close to my heart.
Like without Bitcoin, this industry would be a little bit rough, right? Because it deals with all the regulators and it has the biggest the voice and the biggest lobby. So it's like, I'm not necessarily buying it to make a crap ton of money as much as I am just to support Bitcoin and everything that Bitcoin represents. Yeah,
exactly. And that's a perfectly fair reason. We're trying to make a living in this industry. The clearest way for us to make a living in this industry is to have Bitcoin hit 100K, right? Yep. We're all doing great.
Yep. Definitely, man. I think that with all the products in here, I'm surprised that there's not more of a demand for it. Just people like myself, I'm not selling my 2. You're probably not selling however many you have, we'll take some profits along the way up, but we're going to hold it,
I think exactly. I'm a holder.
That there's got to be a point where you just, okay, I think 20K. I mean, I know the market's rough and everybody's waiting for that next market crash. So everybody always wants to get it cheaper, but at some point people are going to consider this bottom. And then when we do, I think that's when you're really going to start seeing people go, okay, it's not going any lower. We're getting too close to the next halving. We're just going in now, because if we don't go in now, we're not going to get it cheaper. And I think we'll rally eventually. But tell us more about.
Well, that's what happens a lot. That's what's happened the last 2 times, right? And actually, I just want to quickly add onto this. Sorry, I've got.
I got all the time in the world,
and I've got like a little bit of blocked nose and an itchy nose, so I keep doing that, and it makes it look like I've been doing something sus, but it's not.
We're not judging here, man.
I actually find it really interesting right now because just on the vein of the conversation we were having.
Yeah.
The Bitcoin miners are really consolidating now. And we've seen a lot of Bitcoin miners that are going out of business. I've forgotten their name, but the 4th largest miner went out of business. A really large portion of the sales that we're seeing in Bitcoin right now are miners liquidating. From last month, I believe something along the lines of 60% of the sale of Bitcoin was actioned by miners. So miners are at the moment trying to get cash so they can maintain their actual structures, right? Because they're not cheap structures what miners run. So I foresee a real consolidation in the mining industry, in the Bitcoin mining industry. And that kind of worries me because the way that Bitcoin is designed, you want to have more miners than less, right? I was just going to say, I was talking to Rob from Digital Asset News. You may know him. And he's of the opinion that the big players such as Binance, Coinbase, Crypto.com, if we start to see too much of a consolidation in mining and it becomes more profitable to mine again, because when there's less miners, it's easier to be the one chosen to mint the next block, that we're going to start seeing big players come in and fill that gap in the mining market. And that's something that worries me a little, to see these big consolidated megacorps, essentially, well, as close as you can get to a megacorp in crypto, coming in and taking over the actual running of the Bitcoin blockchain. To me, that seems a little antithetical to what Bitcoin was trying to do, right? That's just my humble opinion.
No, I agree, man. We're watching that like we did in 2013 when Bitman first stepped into the scene, right? And when ASICs really went to that next level. I think that's where we're coming out with all these new liquid cooling miners, where hash rates going, like terahash on Kadena just went from like the top dog machine was like 30 or 35 terahash, and they just today announced Bitman's release of their first Kadena miner at 166 terahash for one miner. And the Bitcoin AMP miners just went with their liquid cool ones up to 199 terahashes. So all the old mining farms out there, if you get one of the newest farms with this new 100 rigs, you're almost making the old farms out of business. So I think that we're seeing a lot of the sell-off is coming from farms upgrading to this newer style of equipment. So they have to liquidate they got to buy all the equipment, so. And then
you don't have a choice, right? Because it's an arms race.
Arms race, 100%. Yep. Solar power, and that's where like you said, the megacorps are going to be the only ones really mining Bitcoin, because you have to pretty much buy a shipping container full of miners now just to be.
That's exactly it. You need to lay down, $1 million to be able to do it now, minimum. That doesn't even include the structures you're putting it in, the electricity running costs. Like, it's just crazy.
Yep.
So that is something that worries me a little for Bitcoin moving into the future. Not so much that I'm not going to trade Bitcoin or buy Bitcoin or anything, but I definitely think it's something that the crypto community needs to be aware of and keeping an eye on, right? It's something that we want to try and avoid, just having the miners be megacorps, and then the average person that wants to engage becomes incapable of doing so.
Yep.
So, sorry, you were going to ask me about Wi-Fi, I think.
Yeah, no, man, I like these conversations, man. These are good. What happened at like launch? Like when you guys went to launch, it was just smart contracts weren't executing. Can people still trade assets? It just takes a long time. Like, what's the current status of Cardano right now?
So at the current status of Cardano has gotten a lot better than where it was 6 months ago. When we first launched smart contracts, and then we had the first DEX launch, which was Sunday Swap, a swap could take up to 24 hours. Like, it was a mess. And the worst part was that because it could take so long, there were so many swaps in the line in front of you, which meant that if they all got executed and the price had moved more than, I think it was 2% out of where you set your buy order or sell order, it would actually just put you in a line to just say, we're going to execute your order when you get back to that price level. So a whole bunch of people didn't realize what had happened to their order, and they started getting really angry / scared, because they're like, what's happened to my money? I'm not getting this swap, and it's been 4 days and it hasn't executed. That was poor design on their behalf. I'm sure they've learned their lessons. These are things that you learn by doing. But that's all been solved now. So I can do a swap now on MinSwap in 20 seconds, 30 seconds. Sunday Swap's about the same. Our DEX hasn't launched yet. We're launching with added technology on top of our DEX. We're launching with what's called a bar, the Vi bar. So this behaves similarly to sushi, if you remember the sushi bar, where essentially we take a percentage of every fee that's generated on our exchange, we convert that into our currency Wi-Fi, and then we distribute it to those that have staked Wi-Fi at our bar. But we've extended this model out to be a little bit more general. So we've also implemented an NFT project into our design, right? And we take half of all the royalties that are produced from our NFT sales, we convert them to Wi-Fi, and then we distribute it to our bar, right? We're going to be launching a Cardano staking pool. So that's where you stake your Cardano to earn Cardano. It's how they determine who's minting blocks, because it's a proof of stake network. I don't know if people in your channel necessarily know that. I will just assume that they do and not describe it. But
you guys are going to run a Cardano validator. You're going to take everybody's Cardano. You're going to run a validator, run your own pool, and then distribute
Exactly. And then we take the profits that we make. So you got the individual profits of the users, and then you got half of it that goes to the people running the pool. The other half of the Cardano that's created goes to those running the pool. And we're going to be taking half of the Cardano that's generated from our end of profits. We're going to be converting that to Wi-Fi and then distributing it to the bar, to those that have staked Wi-Fi at the bar.
Man,
so we're essentially extending multiple lines of income to be feeding to our Vi bar, so that we can perpetually make upwards pressure on our token just naturally through its design.
Dude, I was just gonna say that, man. You guys are creating demand, man. Some of these projects don't get that, man. If you don't have some way to generate that demand for your token, it becomes useless. Absolutely
exactly
useless. And if
Absolutely.
people, as soon as people see that, like, I'm gonna hold this asset and it's going to go up in value, whether that's a little bit, it doesn't have to be a crap ton, man, as long as it consistently grows. And so many people want to see something pump, and I'm like, you guys don't get it, man. It pumps, and then what? If you don't take profits, it comes back down, and then you're whining and complaining. I'd rather see it just slowly, steadily put in higher lows and higher lows and higher lows.
That's it. That's it, right? And at the end of the day, that's something that I do like about Cardano, and it's something that I definitely think that we need to be working on in cryptocurrency as a whole, right? It's the maturity of the market. We don't have a mature market in crypto. People see 400% return and they go, oh my God, let's pump everything into there. It's going to be great, right? When the reality is you're either probably going to get rugged or you're going to get impermanented out of everything you have. Right? Like it's not essentially going to go well most of the time, right?
No.
There are sneaky cases where, if you're smart about it and you're savvy and you've got a really firm understanding of what's going on, that you can take advantage of those things, but it's not the average, right?
Yep.
Whereas what we're going for ourselves, for our project personally, is we're going for exactly as you described, right? We're going for sustained returns that, rather than being insanely high, that then destruct your tokenomics, we want to make them sustainable in such a manner that we can actually continue delivering them for many years to come.
And you're using the Cardano validator, right? It puts more Cardano out into supply, which you guys are earning by staking. Then you're taking that, converting it to VY. So you're not putting out new coins of VY. You're actually taking coins out of the market, which adds more value to the VY. That's so smart, dude.
That's exactly it. And we actually, after we finish our DEX and our bar, where the next product we're building is our auto harvester. So that's essentially where users can just stake their Cardano and we manage the liquidity mining on multiple platforms for them. And 15% of all the farm that's generated on our auto harvester is also going to be converted to Wi-Fi and delivered to our bar, right? So that means that even a brand new user that is new to liquidity mining, doesn't know what to do, they come to our platform, they're like, well, I just want to engage with something that's low to medium risk just to get a taste for it. They put 500 Cardano into our medium risk auto harvester. We take that off and go liquidity mining with it. And then once we've completed liquidity mining, our community is able to take advantage of 15% of the liquidity mine that was produced from that new user, whilst that user is able to take advantage of the rest of it without ever having to actually go through the process of manually liquidity mining it whilst they're still new and learning how it works.
Dude, it's so hard, man. It's so hard. It's still, since that day that you came on that show, that last video that we recorded, the volume actually was dead on your end and I didn't catch it. So I didn't actually have a good copy of it, but we never talked back after that. But ever since then, man, I still have a hard time understanding how, like, I really actually get it now. Like, so if you walk me through it again, like I would pick it up instantly, but it's still, for a new user that doesn't understand it, man. I'm watching it happen in Kadena because their DEXs are just turning on right now. And it's like, you're like, dude, why do I have less coins in Kadena? And I'm like, dude, it's impermanent loss. No matter how you look at it, you're gonna, unless you understand how to play the game and you can get in and get out. And that's what you did. You guys built a bot that does all of this for you, right? Because you kind of have to, don't you have to have a bot in theory to...
Well, I mean, you can do it yourself if you've got a team of 4 people across every time zone that can stare at the market at all times and are all very competent and understand what they're doing. Like that's essentially how a hedge fund works, right? Like a hedge fund will have generally 3 to 5 fund managers, and the fund managers will be working different market times and will essentially be managing under the fund strategy, right?
Can you explain your bot strategy a little bit to us? Like, what does that do and how does that all work?
So our strategy is actually a really simple one. All we're doing is we're comparing impermanent risk impermanent loss between different pairs of tokens. Now, impermanent loss is a mathematical function, right? And that's something that a lot of people don't give. I think people realize it, but they never internalize that fact. The fact that impermanent loss is a mathematical function means that based on market conditions, I'm able to calculate it and give it a number between 0 and 1, right? So what's my probability of impermanent loss? And then I can score that probability. Now, based on the score that each pair receives, we can build a list, right? It's a list that basically says these pairs have the highest impermanent risk all the way down to these pairs that have the lowest impermanent risk. right? Now, we can then get a very simple bot that looks at that list and says, all right, these are high risk ones, these are medium risk ones, these are low risk ones based on the expected impermanent loss. And from there, we're able to compare that to the yield that's being offered across the platforms. And we distribute it so that we're focusing on the ones with the correct risk ratio that you want, but at the same time, offer you the best yield given that risk that you're after.
Yep. And what is the average time frame for a bot like that to be in a position, would you say? Just at a ballpark. Are you looking for like 1 or 2 days, get in, get out, take that profit, move on to the next, or is it like a week?
It depends how the vault reacts, right? So this stuff actually works, of course, on a normal distribution. So these impermanent loss numbers change in real time as market conditions change.
Yep.
So that means that different pairs can drop in and out of their current risk levels. So for example, UST, anything else, let's use Terra's example, UST and any token would have been a fairly safe pair in the past, right? It was a stable coin, and let's say a stable coin in Ethereum, that's going to give you amongst the lowest impermanent risk of most liquidity pools, right? But after UST collapsed, all of a sudden that impermanent risk changed completely.
Yeah.
Right? Yeah. The impermanent risk went from being very low to incredibly high.
Yeah.
So in the circumstance of our bot who's perpetually, measuring these impermanent losses and comparing it across multiple tokens, would say, oh, look, these pools have gone from this low level risk to this high level risk, which means if somebody is in our low risk pool, I do use this example of UST. The reality is, just quickly, we as a business, if this happened with UST and they shut down, we wouldn't touch any UST pool. But I'm just using it as an example because people will be able to understand it clearly.
Yep.
When that impermanent risk has shot up, all of a sudden it's no longer suitable for our low risk pools, right? And our bot can very quickly say, well, why is this pool in a low risk? It's a high risk impermanent loss, right? Yep. So the second it notices that risk level is adjusted, it moves things so that and that's called a rebalancing. It rebalances so that you're back into the risk profile that you're after. So the entire idea is that we're maintaining that risk profile, whether that be a lower risk or a higher risk or a stablecoin risk. The option's going to be up to the user. Now, as that risk level is managed, there's another one that can also take place, which is yield. Let's say you've got some pair that they're offering 35% yield on a site, and then we're not going to say a new site because we're not necessarily going to just be adding every new site into our list because we also have to worry about rug pulls and auditing and all those other things. But let's say that another site that we trust has got that same pair suddenly for 50% return, right? Or 50% yield. At the same time, our bot's going to realize, oh, wait, this liquidity pair, I can get a lot better on this site, on this other platform.
Yep.
So when the bot notices that, that's when it goes, well, I guess we'll move it from here to there. So they're the two occasions in which we would be adjusting or rebalancing that pool, right? How often does that happen is very much a question of how often do the conditions change in the market, which is, if I knew that, I wouldn't need to start my own business and I would be a billionaire already.
Yep.
So it's really much a matter of looking at the market and, adjusting as the market moves.
That's so smart, man. In order to make this possible, for a retail investor, if I'm only putting $100 and $100 in, after the swap fees and all that adds up, is it more profitable for somebody with a larger position or a smaller position, or are they the exact same?
That's the beauty of all of this, right? So with these, we get to do it in bulk. So you put in $100, let's say, but in our pool, we've got, let's say, 1 million Cardano, so 500,000 Cardano. Now, every move that we make is the fees divided entirely by the pool, right? So the fees on Cardano to do a move like this will cost you about $1. So if your proportion, $100 in a million is 100 in a million is 0.01%.
Yeah.
So that means you're essentially taking on 0.01% of the fee that's generated by that movement.
Yeah, I see what you're saying. You're making bigger moves because you're going to pay that Cardano gas fee no matter what. Mm-hmm. And you distribute it between that big of a move, you don't even notice it.
That's it. You're spreading it between all the users. So that essentially brings down the cost for everybody. In fact, I would say that an auto harvester is a really good way for users that have smaller accounts and don't want to manage all those fees that are coming in from doing lots of transactions. An auto harvester is a way for them to aggregate those fees amongst a large group of people.
Now, how do you feel about Cardano's ability to scale? Do you think everything is going to go to layer 2s? Or are we going to have another instance where like this Vasil hard fork, what the changes that were made are not enough to support the amount of development on Cardano?
Well,
or
I don't expect that to be the case, but there are already some layer 2s that have started arising. We've got Milkometer, or Milkometer, I don't know how to pronounce it. It's milk and then OMEDA, like Andromeda. So I assume Milkometer because that's like Andromeda Galaxy. But Milkometer is a layer 2, and we're soon going to be launching a liquidity pool on Milkometer. So our Wi-Fi is already bridged to Milkometer.
Oh, sweet.
And then we're already looking at Ceres Bridge, and Ceres Bridge would allow us to bridge ourselves to BNB and bridge ourselves to Ethereum. And then we could start doing some things in BNB and Ethereum as well. What we want to be really careful of, though, and this is where it's going to take a little bit of work from both, the engineering side and the marketing side and the business side, just every side of the business has to really focus on this. We need to work out what safety levers there are, how much risk there is involved with our community doing this. Because we recently had the Nomad hack. I don't know if you heard about that one.
Oh yeah, every bridge hack I've heard of, yeah.
Yeah, so we recently had the Nomad hack, which was a bridge that allowed you to bridge to Cardano, right? So it went through Milkometer and it also allowed you to go to Cardano. And one of our, I don't want to say competitors, that's the wrong word. Cardano is a very congenial ecosystem. So I'd rather say one of our colleagues. One of our colleagues, Wing Riders, they had $22 or $23 million in liquidity being held from the Nomad chain on their site. And then after the Nomad hack, they got absolutely obliterated. Right? Which, a lot of people on their site lost a lot of money. You can understand why people are upset.
Yeah.
So we definitely want to avoid setting ourselves up to be in that situation.
Yeah.
Now, the way Milkometer is designed is it's actually built into the blockchain. It's really interesting. If you send from any Cardano wallet to an OX wallet, it will actually automatically bridge it for you to Milkometer chain, and you'll receive Milk ADA. And then you can send the ADA straight to your MetaMask. So if you open up Nami wallet or Eternal wallet or any Cardano browser wallet, there's actually the Milkometer bridge built straight into the wallet.
Oh wow, that'll make it very convenient for people.
Yeah, so it's super easy to bridge to Milkometer. And we're going to be launching a few farms on Milkometer, and we're working with 2 dexes on that chain, right? I won't name names now because I don't 100% know when this video will be released, but it'll probably the announcements will be made by the time it's released. Just to be safe. But we are working with 2 dexes right now on Milkometer. So do I believe that Cardano, in the future, I don't believe Cardano will need layer 2 solutions, no. In fact, I think that future isn't even very far. I think we'll have that future within a year, right? But layer 2 solutions exist now, and I don't think they're going to go anywhere in the immediate future, right? They're definitely a workable solution right now. That's why a lot of projects gravitate towards them. We design everything that we do, though, with the concept of long-term in mind. Yep. I really believe in trying to build a long-term sustainable DEX.
Oh, yeah.
And in doing that, I don't think we need a layer 2, specifically, no. I guess would be my answer.
Sweet. Yep. Dude, that's good, man. So what are you guys' big plans? When do you guys think you're going to have your DEX up and running where everybody can interact with it and trade with it? And when is this next? When is the next upgrade? The next upgrade is 22nd of September. Either end of this year, January, maybe early February. We need to do some auditing and we need to do a few things the timeframes aren't necessarily in our control. Like when we do an audit, we don't know how long that's going to take. Yep. So
our plan is between end of December is a tough time. It's Christmas. So let's say January, February is our aim.
Okay.
Right.
Cool. Yep.
But that being said, that's not all we're launching. We're actually launching the first ever lottery on Cardano in the next 2 or 3 weeks. So that'll be fun.
Dude, say that again so we can be able to go on your site and buy like randomized...
And buy lottery tickets, yeah. And then partake in the Wi-Fi lottery. That's absolutely it. And that's going to be the first one in all of Cardano. And the reason that was so difficult, by the way, is because Cardano doesn't have oracles yet. So you can't actually provide a random number generator to the blockchain. So the blockchain doesn't have any way to just pull a random number. So we actually had to work around this and use the blockchain itself as our random number generator.
You pulling the hash? Yeah, dude,
Yeah.
Nice, bro. That's tight.
Right. So we basically reversed the idea, decided to use the blockchain to generate that for us, and then from there we were able to build up the lottery. Took a little bit of it was a bit of a fun design work, but we got there.
Dude, that's sweet. And when is that launching?
Probably 2 weeks. We're doing testing right now. So like, assuming nothing goes wrong, I'd say by the end of this month, I think is the safest to say.
And how's it going to work? Do like we pick out like 1 out of 20, or how does the lottery work?
No, so this one works slightly differently. You can actually pick, but your ticket number is generated from your transaction hash, right? So when you purchase the ticket, you know how the transaction hash has got long strings of random numbers?
Yep.
We basically pick a set of those random numbers, and we don't tell you whereabouts in the transaction hash that set is coming from. So you can't sort of infinitely pick it. And then after you've purchased the ticket, you can purchase up to 8 tickets in one transaction. And after you purchase the ticket, the screen will show you these are your ticket numbers, right?
Yeah.
Then at the time that a winner is chosen, we timestamp it. So we say this block number is when the winner is chosen. We look at the block hash, and then we compare the same number of digits from the end of the block hash to all the tickets. And if there are any matching digits to the actual block hash, they receive the prize. If you get 2 out of 3 digits matching, you receive second place prize. 1 out of 3 digits matching, you receive third place.
And how many digits are there? How many digits are you matching?
Well, we're beginning with 3 hexadecimal. So because they're in hexadecimal for being on the blockchain, right? Because they're on the blockchain. We're still, look, I don't want to say 3. We're still testing that a little because we're not 100% sure what our demand will be. If we find that we have a lot of demand, then we'd want to use 4 or 5. So we might launch with 3, we might launch with 4. We're still not 100% certain on how many decimals it's going to be or how many integers you're going to get in your ticket yet.
Okay, sweet, dude, that's cool. And what are the tickets going to be? $1, $2, $5?
They're going to be 10 Wi-Fi, which I believe at the moment is $3.
Oh, and you're using Wi-Fi. Dude, so smart. More demand, my friend, more demand.
That's
there
it.
You go.
And the best part is, you know, it's everything that we do goes back to our bar. So when we redistribute 80% of all the Wi-Fi taken into the winners, and then that 20% that's taken in that doesn't go to the winners, half of that's redistributed to the bar. So it's actually shared amongst all those that hold Wi-Fi.
Damn, dude, that's so sweet, dude.
Once our bar is running, of course, I should add. Not yet. It's not running yet.
Dude, that's awesome, man. You guys got a lot of stuff going on, man. I'm excited
Thank
to see
you.
where you guys take this. Is there any other big announcements that you guys want to talk about, or what else can we share with everybody?
We've got our new V2 smart contracts for our token vaults and our NFT vaults. So they're essentially going to be Vasil compatible, which means that we should no longer have any sort of line issues with people harvesting our tokens or harvesting our NFTs. Because we have had moments, for example, our NFT vaults are timed, so they close at a certain time, right? You have to have your NFT in there for, let's say, 30 days, and after 30 days, you get to harvest. What we found with the old design is that because it's timed, and when we launch the vault, a lot of people jump in. When the vault ends, a lot of people simultaneously come in to jump out, so they come in to harvest simultaneously. With the current design, that creates a lag. We can only process 1 at a time, and we can only do 1 block at a time, 1 per block, right? So that means if we get 400 requests, before the 400th request gets their NFT, we have to go through 400 blocks.
Yeah.
This issue is going to be solved with these new smart contracts.
Wow, that's crazy. Because it's going to be elastic blocks, so you'll be able to fit more data.
Essentially, yeah. So we can basically pipe down as many as we'd like.
Wow, that's crazy. Is the elastic blocks going to create any storage issues long term for the size of the blockchain because you're putting so much data on chain?
Yep.
Yeah.
Like, honestly, yes. That is definitely something that, you know, we're all working on. There is a lot of data improvements in this recent Vasil hard fork, which actually optimizes the data storage itself. But I do foresee that becoming a small issue down into the future. At the moment, it's not that much of an issue because we just don't have a block size. We just don't have the data that's required at the moment isn't that insane. It's like 2 gigabyte or 3 gigabytes for the entire blockchain, right?
Yeah.
These are problems that need to be sort of worked out over the next coming years as that really starts to expand. So in the foreseeable future, no, it's not going to be something that's going to be immediately a problem.
No, not for years.
Right? It's going to be a few years down the line, but it's definitely something that we need a solution to. Yes.
Why couldn't they I never understood that. Why couldn't they, like, every, say, once a year, like, just take a snapshot of a chain, compress those blocks, put it into one block, and just keep on going? Why do you have to store the whole thing in individual blocks? Why couldn't you?
That's a really good solution. And so there's a system called Hydra that they're working on in IOHK, who run Cardano. And Hydra are essentially, you know how you can go to MetaMask and you can change blockchains that you're on through MetaMask?
Yeah.
You can think of Hydra as an exclusive blockchain that runs on Cardano. It's not its own blockchain. It's called a Hydra head, but it's an exclusive transaction set that you can connect your wallet to for specific things, right? So for example, if you wanted an app on your phone that did a specific function, you could have your own Hydra head for the app on that phone, right? And then every so often, just like a layer 2, it beams that information off to the main chain.
Yep.
Now, what I've heard people discuss, and I don't know if this is going to happen, but using Hydra, we could actually do something similar to that, where we can compress blocks, previous blocks in the past, and store them on a Hydra head that the chain can correspond to when needed.
Dude, that's sweet, man. It's pretty cool watching all these projects and like what they're having to do to try to keep up with the ever-growing demand, of like, we need to put more data on chain, we need to put it faster, and like how fast can we scale, or how can we make it work? It's really interesting watching all these projects navigate their own unique approach, and everybody's got their own different approach to it. So it's going to be interesting to see. And
every chain has its unique set of problems, right? Like nothing's easy in this business. I'll tell you what.
Nope. No matter how great the team is or how advanced the technology is, it's like there's always going to be some different type of problem. I can't wait for the day for this to be like, we have chains that just run. Okay, like our layer 1s are there. Now let's see what can be built on top of them, kind of thing, because we got layer 1s that actually scale,
Yeah, I absolutely agree with you, right? And that's why I'm so excited for what's coming up in Cardano, because we're going to actually start to get some of that. And we do have, we have more hard forks coming up after Vasil. This isn't the last one. They're still going to be continuously optimizing. They're still going to be continuously making this a better system.
What about gas fees? How do you feel about they're being too expensive to interact with DeFi at 25 cents a rip? Is there any talks about that coming down, or is that set in stone?
Yeah, so Vasil will be pushing that down a little. Yeah, absolutely.
Good. Okay, cool. Hell yeah.
But at the moment, the major cost that is generated is because of the model that has to be used on the Cardano blockchain, which is called the Scooper model for DEXs. So with DEXs, you can't just directly interact with the swap contract, right? Because of the design of the blockchain, you essentially need to send your request for a trade to a Scooper contract. That Scooper contract collects all those trades over a period of time, and then it executes it into the actual liquidity pool. Now, this sounds like it's obtuse. This is essentially a byproduct of the logic of the Cardano blockchain. Now, to initiate the trade of the Scooper contract costs a fee. So the reason it's costing you 50 cents to do a swap at the moment on Cardano is because there is that second set of fees that have to take place, as well as that sending in your money.
Yep.
Now, after Vasil with DEXs that have updated contracts, I would expect that to drop by about half to do a swap. Maybe a little less, maybe drop by a third to do a swap, right?
Yep.
Now, in comparison to a lot of chains, that's fantastic.
Mm-hmm.
In comparison to some chains, that's still a little lacking, right? If you look at Velis Network, you look at BNB, they're cheaper.
Yep.
But that said, Cardano comes with the advantage of actually being decentralized, being a proper decentralized chain. There are over 1,000 stake pools at the moment that are generating blocks, right? And those stake pools all work on votes. CIS is essentially democratized mining.
Yeah,
right?
Cardano did the best out of all proof of stake chains at decentralizing their voting process, 100%.
Absolutely. And that's something that, to me, look, it comes down to philosophy to a certain degree. But for me, the advantage of being able to actually access a truly, at least what I consider to be the most decentralized of the major blockchains, and you're able to access a swap on it for far less of the cost than a transaction on Bitcoin, far less of the cost for the transaction on Ethereum. I think that that's still a very strong value proposition.
Yeah, they have one of the largest communities too in the whole crypto space. Cardano holders are.
Everyone thinks they're a bot.
Yep.
Classic joke, the Cardano bot army. But it's not the Cardano bot army. The reality is, and this is what I really like about Cardano, right? Cardano isn't a group, and I mentioned this earlier as well. Cardano is, I would say, a financially mature group or a mature community, financially speaking, right? In Cardano, if someone brings out a pool that's 200%, you're more likely to have a bunch of people look at it and go, that doesn't seem right, and I don't like it. Which in Ethereum or BNB, you'd never get that, right?
Yep.
But that's a good thing. That means that the community is actually questioning, where are these returns coming from?
Yep.
You know, how are you generating this to be able to give it out? And how is it in any way sustainable? Because Cardano is all about sustainability.
Yep.
So these philosophical underpinnings are essentially what drive our project as well. Right? And I know, I'm certain you've got some Cardano haters in your audience that are going to be absolutely hating on me for saying this, but you've done something when people hate you.
Dude, I just like picking on the Cardano people because they get all riled up, man.
Oh yeah, they do. And
I have a blast doing it.
I never get riled up. Look, to be fair, I run a business. I can't afford to get riled up.
Yeah.
But I honestly just don't care. You know, at the end of the day, we shouldn't be separated. We should be working together. They're all blockchains. It's all good technology, whether it's Cardano, whether it's Ethereum, whether it's probably not Bitcoin, whichever one it is, we should be looking to come together and work out how we can get this technology to as many people as possible. We shouldn't be sitting on our island and saying my island has got a better house than yours, or my island's got better beaches than yours does. So I never want to come visit your island, right? That's silly. And even from an investment perspective and a diversification perspective, it's silly, right? If you're going to invest in crypto, the least you should be doing is diversifying to some degree. You shouldn't have everything in Bitcoin. As an example, Bitcoin dropped below 20K, we pumped 40%. Right? That's not financial advice. I'm not saying come and buy BYBIT to protect yourself against the bear market, right? But what I'm saying is that having a level of diversification gives you the opportunity to be able to take advantage of the market somewhere else whilst your principal investment isn't necessarily doing very well.
Yep, 100%, man. I'm actually finding out that I've been diversifying. I've been making more money because when I marry a project, I can't take profits. You know, I can't trade in and out of that position. I just keep wanting to buy more of it, and then I don't want to sell when it goes up because I feel like it's going to keep going up. You know, so I'm like, all right, I got enough of my main portfolio. Now I need to start making better moves into assets that I can get into, take some profits out of the top, you know, or build a position into because I'm able to take profits and get back into it, and take profits and get back into it. You know, so. Definitely diversification.
Look, I would love,
man.
If you give me the opportunity. I've told you the story last time. Anyway, I would love the opportunity to come onto your show and have a chat to because I'm a hedge fund. I was a hedge fund manager and hedge fund trader, right?
Yep.
I would love to come onto your show and go through with your audience an actual description of how can I work out when to ease in, when to ease out. What are the ratios that I can use to be able to kind of work out where's my exit strategy, where's my entry strategy, what's my defense strategy, and how you can sort of formulate a plan around it.
Dude, we love that, man. When are you free next? Will you just want to shoot me a text whenever you get time, or we'll schedule something else?
Done. I would happily do it. I would like to do it even later this week or next week.
Dude, I'm ready, man. I'm free most of the time in the afternoon, so whenever you get time, we'll let's set it up and let's get you back on here next week.
Perfect. Let's definitely do it. And I want to go through I would love to basically just really go through a succinct description of risk reward.
Yeah.
A lot of people don't understand firmly the concept of risk reward and the concept of alpha, and how you can use risk reward and alpha to essentially build trades.
Dude,
right?
Love
and
that, man.
That's all I do. I use risk reward, alpha, and correlated markets. I essentially don't do technical analysis anymore. And this is coming from someone that spent 3.5 years like hard diving technical analysis, right? Like I've done a lot of technical analysis.
Yep.
So much of my life. Sorry.
Dude, I have a lot too. I don't really use much TA anymore either. I use one indicator and that's about it. I use so much else.
Right? That's it. What really drives markets, in my opinion, and again, all opinion, I will have 1,000 traders that will scream at me for saying this.
Yep.
But what really drives markets, in my opinion, is an understanding of the psychology that's underpinning the market.
Yep.
Right? To me, markets are a play in psychology more so than they are a play in maths. Right? There's also maths, don't get me wrong, but you're essentially dealing with human emotions.
Yeah, you know, blockchain's day trade hopium, in my opinion. You know?
Exactly. You know, hodl for dear life.
Yeah.
That's all emotions, right? Yep. So to be able to use these, to be able to trade just in a way that is sustainable, you need to make sure that you're emotionally aligned with the market. If your trades aren't aligned with the emotions of the market, you're probably going to lose. All I was saying is I'd just love the opportunity to have a chat about just those raw trading strategies that underpin not just cryptocurrencies, but underpin markets, I guess you'd say. It's just, how can I manage risk in the market?
Dude, I'd love to, man. My audience we'd absolutely love that, man, because I don't understand much about that. So I'd love to have the opportunity.
You're a humble man. You're a very humble man, right? I'm sure you
do. So yeah, we just want to end it on that, wrap it up there, and we'll link back up next week whenever you got time.
Perfect. And I'd really like to thank you for having me on, Ryan. It's been an absolute pleasure. And as always, great chat.
Dude, always, man. You're my buddy, so it's a great time to see you, man. So I appreciate it, man.
Thank you.
All right.
Have a good day, everyone.
Later, buddy.